Hello, financial fans. Another week gone by into the year 2023, and a little bit of a move upward this past week for most of the indexes. I did not buy, nor did I sell any stocks or ETFs this past week. And my portfolio year to date. Last week it was down year to date. And this week my portfolio is up a little bit year to date, up 0.78%, 0.75% upward for the entire year thus far. SPY, the spiders, the S&P 500 index is up 3.21% year to date. And the diamonds, DIA, Dow Industrial Average, Dow 30 stocks, year to date they are down 2.66%. And QQQ, the NASDAQ, the shining star of all the indexes, QQQ is up year to date 16.5%, so they're doing quite well. I picked out a few stocks to look at and consider for those of you who are thinking about browsing stocks with the intention of buying. Perhaps I am not a financial advisor, and any money you invest in stocks can be lost. But I picked 4 different stocks from my holdings, my personal holdings, that seem to be doing pretty well thus far, and I've held on to them for a while, and it looks like the trend is your friend, and the trend seems to be up for these 4 stocks. We're going to begin with ASX. That's the symbol for ASE Technology Holding Company, and ASX was down on Friday almost 1.5%, and after hours down a little bit more. It's a low price stock. $7.66 was the closing price, $7.64 the current price on ASX per share. Column on the left, 2/3 of the way down, 52-week range. $4.45 was the low per share price, and $7.85 was the high. So we're nudging the high right now at $7.64 per share. The average volume, about 6 million shares trade every day, and this stock is considered to be undervalued. The PE ratio is under 10, it's 8.06, so we like that. And the earnings per share, 95 cents per share. The forward dividend and yield, non-existent. It does not pay a dividend. 1-year target, they're saying $7.33, which would mean it would be going down in the year that we're in right now, and down for 52 weeks. But I think otherwise, it seems to be a stock that has upward mobility right now. Next we look at CIG, and it's a mining stock. It would be called a penny stock, $1.98 per share, and the 52-week range, $1.82 to $3.39 per share. The average volume, about 4.5 million shares trade every day, and the PE ratio, 6.19, so that's a nice low PE ratio. Forward dividend and yield, they're paying 18 cents per share out of earnings of 32 cents, and with only 18 cents going for the forward dividend, it still comes out to 9.31%, so it's got a nice dividend. 1-year target estimate, $2.44 per share. Next we look at Marathon Petroleum Corporation. MPC is the symbol, and the current price $124.70 per share. And the 52-week range, $77.62 to $136.46 per share. And so it is closer to the high right now than it is to the low. The average volume, about 4 million shares trade every day, and this stock is considered to be undervalued. And remember, I do own these stocks that we're looking at today. The PE ratio for MPC is 4.46, under 4.5, so that is a PE ratio that gets my attention. Forward dividend and yield, 2.38% is the yield, and they get that with just $3 being given out for each share, and the earnings per share was closer to $27.95. The 1-year target estimate, $152, and that would be a major move upward. That would make this a growth stock. Last stock we'll look at, Stellantis, STLA is the symbol. 52-week range, $11.37 to $18.86 per share. So it also is closer to its high than its low. And the average volume, about 5.5 million shares trade every day, and this stock is considered to be undervalued. PE ratio, under 3, 2.94. The forward dividend and yield, it yields about 8.5%, and it does that with just a small amount of its earnings per share. And the 1-year target estimate, $20.38 per share. And I thank you very much for watching.